All right, well, welcome. I am Mike Bellafiore, and I'm the co-founder of SMB Capital, SMB U, and SMB Systems in New York City. How many people in here are thinking about trading after they graduate? Good. It's a big number. Anyone close to actually graduating? Okay, good. So, what's a proprietary trading firm? So what we do at our firm, we run a desk, a proprietary desk, where the firm fully backs traders. We provide the proprietary technology. We take all the losses. We provide all the capital. Your job as a trader is just to trade. We split profits. We don't mark up commissions. It's just a P&L firm. If you guys don't make money, then we don't make money. And the challenge for firms like us is that it's very expensive to do all of this in New York City, and it's very expensive to give people really great technology. At our firm, we give people custom filters. We give people the ability to auto trade. Anyone in here really good at math or crunching data? Okay, and that's a field that's growing and growing and growing in the trading space. So our challenge is, hey, we got to do all this. You guys all got to make money so that we can pay our bills and see a return on investment. And auto trading is really something we're focusing more on. We have an education arm, so we have three entities. We have a prop firm, we have an education arm, SMB U, and we have an algorithmic trading arm, SMB Systems. And in our education arm, we teach people how to trade from scratch. We teach stocks, options, futures, FX, automated trading. We have a college training program as well. So what do we want to accomplish here today? We're going to talk about how do you know? So a lot of people raise their hands, right? So a lot of you have walked into this room and you kind of think that you may actually want to trade. And so I want to actually talk about how you can answer a question about whether or not you really want to do this. Because, hey, you graduate, you spent a lot of time going to this great university. I'm sure it's very expensive. And you want to make sure that you don't spend the first 3 years of your life perhaps doing something that you thought you liked, but you didn't. And I think the way that our trading world is set up is it's quite easy for you to think that you like trading, start it, and then recognize perhaps you don't. And there's things that we can talk about you doing so that you really can answer that question before you graduate. Is this something that I really want to do? How do you put yourself in the best position to land a job on a trading desk? These are very, very sought after positions. How do you do it? And you don't have to have actually gone to an Ivy League school or a really top university anymore to necessarily get a job at a very, very good proprietary trading desk, or at least one that is hiring correctly, in my opinion. And so we'll talk about, how do you put yourself in a position when you're going for an interview that you're in a position of strength. All right, so first we want to know, is this something you really want to do? And secondly, how do you put yourself in a position to increase your odds, okay? We're going to talk about 3 of our better traders who we trained from scratch. They didn't know how to trade. They came to us and were working on their game, and they've gone from, in some cases having never made money in the marketplace to, being able to make close to, 6 figures in a month for some of the guys we're going to talk about, which is it's a big leap. All right. How do you know if this is something that you really want to do? So let's open it up. Now, how do you think you would know if trading is something you would really want to do? Okay, if you enjoy it. What else? You like risk. What do you mean by that? Does that mean you like to go jump out of airplanes and...
I mean, with your money, maybe risk reward.
Okay. All right, what else?
You're becoming successful.
Okay. How would you be successful? All right. So you mean you would maybe start playing around with a simulated trading account? Or a real trading account? Okay. How many people in here have simulated trading in the past? Okay, great. And how many people have traded live with real money? Okay, and how many people have traded with real money and actually consider themselves to be profitable? Okay, the hands went down each time I actually asked a follow-up question, but that's good. That's really good. So I went to a lecture which has really stuck with me and I think really helps you guys answer this question, because look, in this day and age where you can do so many different things and you're so young and you have the whole world, I wish I could be all of you. Again, it is the greatest thing in the world to be young and single in New York City. Okay, it is a blast. I love my son, I love my wife, but it's still a great thing to go back and be young and single. And you really have this opportunity, and with all this opportunity, you really want to put yourself in a situation where you're doing what you want to do. And so I actually went to this lecture at the Y on 92nd Street. And so one of the people that was talking at the 92nd Street Y was the author of this book, Drive. His name is Daniel Pink. And he told an incredible story about how he got into writing after first going to Yale Law School. So this is somebody who has gone to the best law school in the country. I'm not going to get into an argument whether Yale or Harvard are better than each other, but most people consider Yale to be the best law school in the country, and he's sitting there. He has achieved essentially a goal that very few people can achieve, and he's headed towards being at the very least in the upper middle class. This is a good thing, right? And he's sitting there in law school, and he's spending all of his time writing. He's writing a $10 article for some magazine that nobody's actually going to read. He's writing a $15 article for another magazine that certainly nobody else is going to read. And he is absolutely, as he admits, at the bottom of his class, in the bottom 20% at Yale. And because he's not studying. And he recognizes something, he has this epiphany that I think all of you hopefully will get to. And certainly you should get to if you actually want to answer this question about whether or not you want to trade. And that epiphany was what? He loved to write. He got into the best law school in the country. He didn't want to be a lawyer. He wanted to write. It didn't matter that he wasn't really even making any money at it. It didn't matter that he was even writing for trash periodicals. He loved what he was doing. And so when I was young, and I'm sure a lot of your parents say this to you as well, my dad would always say to me, just do something that you love and don't worry about anything else. And Dan took that idea and he turned it on its head a little bit and came up with an even more specific way for you to figure out whether or not you're doing the right thing. And it's not do what you love, it's do what you do. And so if you are really sitting there, look, I sit in a seat, and Ryan does a lot of interviews as well. We interview, we get tons and tons of resumes, and we probably still interview 20 people a week. I'm not sure what the number is, but we get hundreds and hundreds of resumes, and we whittled that down to probably 20 interviews a week. And I sit there in my seat, and Ryan sits there in his seat, and people say, I really want to be a trader because I watch CNBC, I read the Wall Street Journal, and I like that. And we sit there and we say, you know how many times I've heard that answer? What am I supposed to do with that? How am I supposed to spend my enormous, the resources that we put into each person who we train? Like, are you kidding me? Like, I'm going to put my resources, in New York City with all our overhead and all of our time. I'm just going to give you an account and let you trade on our desk and train you because you told me that you read the Wall Street Journal and because you watch CNBC and you like that doesn't cut it. Don't even go to the interview if that's your best interview. If that's your best answer, just don't even show up. Just stay at home. But we find that we're seeing more and more people who can answer the question a different way, which is, you know, how can I demonstrate that I really love trading, and why should you put faith in me? Because I've been trading for the last 3 years in college, and my last trade was in Goldman Sachs, and I got long the stock because it was at the 200-day moving average, and I like the XYZ about the fundamentals, and I'm short, and I'm short oil because I actually think that over time it's going to go down. And I'm long Fannie Mae because I saw it break out above 350. And I also have a position in DDD because it's one of the best 3D printers. Those are the answers that you need to give when you're in college if you want to actually land a desk on a professional trading desk. And to take a step back, that demonstrates that you really love trading, right? Because you're doing it. You know, you don't have to sort of strain to open up your Think or Swim account and place a trade in a biotech that you think is going to go up. You really love to do it. And so there was a really great book besides Drive that I recommend you guys reading, which is Flow. And it was written by this University of Chicago former head of the Department of Psychology. And his last name is a last name that I absolutely cannot pronounce. And not only can I not pronounce it, I actually put in a way for me to pronounce it, and I still don't think I can pronounce it. But he wrote a really, really great Chick Sent Me High. So he wrote a really great book, and the name of the book is called Flow. And the point of this book is that you're going to find, and this is great that you're all so young, you are going to find that there are things that you enjoy doing such that when you do them, time stands still. You will sit there and 45 minutes will go by and you will not recognize that you are doing what you are doing. I do not know why, when I wake up on a Saturday morning, that I can sit down at my computer screen and write something about trading, whether it's a blog post or whether it was something for one of my books. I can just wake up and I can just do it. It's not discipline, okay? It's not I'm some great writer. I just enjoy doing it. There's some sort of silly connection that I have with doing that makes sense to me. When I was young, I really loved playing sports. I went to college. I was a Division I athlete. You know, you didn't have to force me to go lift or to go, you know, run or to go work on my game. I loved doing it. There was just something about doing it that made sense to me. And that's a state of flow. You know, when you're really doing something that you love to do, you just are embraced. You're just full in. It is you are present. You are present in the moment. Okay? And that's an idea that you should think about when you're trading. Is it 9:30? Is at 11 o'clock? Do you look up and you're like, oh my God, like what happened to the last hour and a half? Where did the time go? That's you being in a state of flow. That's you loving what you're doing. And if you don't, you know, that's fine too. Go be an investment banker. I don't, you know, go write a book. All right, so how do you improve your chances of being a pro trader or getting a job on a desk? Who's got some answers? Now, we've given away potentially some clues so far, all right, but what do you think you need to do? Yeah?
Start with a paper account and then start trading your own money.
Yeah, all right, great. Start with a paper account. Anybody can do that, right? Anybody can open up a paper account and start simulating your trades and keep track of them, see which setups make the most sense to you, which setups aren't working for you. Start to dabble with different time frames. There's a lot of different ways to attack the markets. Some people like longer term investing, some people like shorter term trading, some people like automated trading. All right, what else? Yes?
Start from real trading because so then
Start in real trading.
Yeah.
Don't simulate. Don't start in simulated trading.
Because trading is not for everyone, and anyone can open an account with paper trading, but
Yeah.
when you experience your losses on your real money, you know if you're fit for this or not, and you can show your results, and I mean you can see and make some judgments about that.
So there's a funny story that I can tell you about that. First of all, let me just give you the two people that are probably clashing on whether or not you should simulate trade versus whether or not you should trade live. So Dr. Brett Steenbarger writes a blog at Trader Feed, and he's probably the best trading coach that I know in the entire country. He works for Paul Tudor Jones. He's a tremendous resource. You should go check out his blog. He writes on it multiple times each day. He recommends that people should simulate their trading. Start with a paper account and not to trade live until you can actually show success paper trading. And then Howard Lindzen is somebody who started StockTwits. StockTwits is like the Twitter for stocks. And he suggests that people should just, as you did, he would agree with you, you should just trade live because there's a very big difference between paper trading and trading live. And I know that from experience. When we first started SMB, we started it with like 4 people. You know, now we have a big firm. When we first started it, it was me, one of my friends, another one of my friends, and this guy Mervin, who we trained. And Mervin was the greatest demo trader, simulated trading we call demo trading. He was the greatest demo trader I've ever seen. Okay, he made money every single day on the demo. And Steve and I, my partner, were sitting around, we're like, this is awesome. We're gonna make, he even said it, Steve was like, we're gonna make so much money off of this guy, Mervin. Look how much money he makes on the demo. And so we turn him on and he trades live. And I don't think he was positive ever in the history of our firm. He lost money every single day. It was almost like if he just would have done the opposite of everything he was doing, we probably would have had something there. And so he was a great simulation trader, and he was one of the worst traders I've ever seen trading live. So I'll let you guys figure out which one is best. I would side on the simulation first side before trading live, but we'll leave that up to you. I wrote about this in my recent book. I wrote 2 books, One Good Trade, and my recent book is called The Playbook. And I formulated this test that I think helps us get to the right answer. And so I call it the GM test. This is something to help you get that job as a trader on a prop desk or an institutional desk or whatever you want. And so I think the way that we actually have been hiring people on the street is entirely backwards. And anyway, I'm gonna present this test that we should all think about. All right, and I think that this is the way we should be doing things going forward. So this is the way it really has been working in the past. All right, let's say that I am the GM of the New York Knicks. Do we have any basketball fans in here? Any Knicks fans in here? All the hands went down. That's not a good sign. So let's say, but we'll stay with this. Let's say I am the GM of the New York Knicks. And how many people in here play basketball? Pick up basketball. All right, so you are playing pickup basketball, right? I'm the GM of the New York Knicks. What do you play like? Do you play on a club team? Do you just pick up basketball? All right, great, even better. All right, so you play pickup basketball, and I think this is the way we've been doing it in finance and in trading. So you play pickup basketball, and I'm the GM of the New York Knicks, okay? And you come to me and you say, you know what? I've been playing really well in my pickup basketball games, and I've been really working out. I've gained 10 pounds. I'm taking this Myoplex, and I'm getting a little bit more buff, and I've stopped drinking Pabst Light, and I dumped my crazy significant other, and you know, I really think I like this game called basketball. You know, I watch it on TV. Why don't you draft me in the first round? And that's what really we've been doing in finance. And if I were to then draft you in the first round, what would you think of me? You think I'm crazy, right? But isn't that what we've been doing in finance, which is some really smart person sits in front of a partner and says, I really like trading, I'm really smart, this is what I got on my SATs, and here are what my grades are, and like, I can tell you what's going on in Bolivia. Like, what does that have to do with trading? You know, how does that show me that you have the skill to trade? And you know, you guys all said, one of the ways that you can help yourself get a job is to keep on top of current events and you know what's going on in the marketplace, and that's fine. But trading is a skill. It's a skill just like it is a skill to play in the NBA. it is not about only knowledge. It's not like you read a whole bunch of stuff and you can become a really good trader. I could teach you everything you needed to know about trading and you wouldn't be able to make money because you got to turn that knowledge into skill. And so, yeah, I mean, you should, I would think I'm crazy, right? To sort of, draft you in the first round. And so that's probably not the way we should really be doing it going forward, okay? Because we understand that trading's a skill. So I had this interview, I remember specifically going through this. Gentleman walks in and, I really want to be a trader. I'm going to be the hardest worker on the desk. I watch CNBC, I watch the Wall Street Journal. I really like to trade. Give me a job. My question, why should I actually put resources into you? Why do I think you're going to work hard at this? It tells me a really interesting story. Well, Mike, when I was a freshman, I went to college and I played basketball, and my coach told me that I was probably going to be cut by the end of the first year. I was a little bit overweight, and by the time I was a senior, after working on my game each year, I became all everything. I was a college recognized basketball player. And I'm listening and I'm like, wow, that's pretty impressive. This is a hard worker, right? He was going to get cut. He was a little overweight, he's now in shape. This is a hard worker, right? That's a good answer. And so I was impressed by that. And so we gave him a spot on the desk because we did things differently back then and we made bad decisions at times. And so we call him the butcher. And so the butcher shows up and guess what happens? He leads the desk. He leads the desk in checking the ESPN NBA homepage. And he is the last one in and the first one out. And when senior traders come over and ask him to make changes, he doesn't make them. And when we look through his trade reviews, they're sparse with very little detail in there. And when we are sitting in our mentoring sessions, he's not actively participating. He's just sort of sitting there in the back. And you could take what away? If I were to tell you that about this gentleman, what would you say about him? Yeah.
He didn't have a passion for trading.
Okay, but you might also say, if you didn't know some of those things, you might say he's lazy, right? He's not a hard worker. I don't think that at all. He is a hard worker. He's a hard worker in basketball. All right, but you're right. He doesn't have a passion for trading, and good guy, but it's just not his thing. And the lesson that I hope that the lesson he learned, I hope he took a lesson away from this. But there's a great quote from Oprah here. I love Oprah. When is Oprah going to come back? There's a lesson in almost everything that you do, and getting the lesson is how you move forward. It's how you enrich your spirit. And so the lesson for us, for our firm, was not this person was lazy and there's something wrong with him. The lesson was we got to hire people who have a passion for trading. And we shouldn't even be bringing people in who don't. So there's this big anomaly in trading, which is, when I was young, I wanted to play for the New York Yankees. All right, and I went to college, and I was a Division I athlete, and I realized in college that I wasn't going to play for the New York Yankees. But I really wanted to go be on that mound and pitch. I really wanted to do that. But they wouldn't let me. Okay, I can't step onto Yankee Stadium and pitch for the New York Yankees. I could, but someone would arrest me. But in trading, and this is the anomaly, in trading, okay, you can actually step onto Yankee Stadium, the equivalent of Yankee Stadium, and play. You can go open an account at Ameritrade with very little money and start playing. You can start walking on the field of Yankee Stadium and do it. And the problem is that access doesn't mean that you should do it. Because you actually can walk on the field in trading doesn't mean you really should be doing it, because it really is almost as hard as being a professional athlete. I don't think it's as hard as being a professional athlete, but it really, I think that's a good analogy for it. And that's the problem, is that people think, oh, I can just turn on CNBC and I can open up a thinkorswim account and I can start making trades and I'll make predictions about where the market's going to go, and that's really all there is to it. Because they can do it, right? But you really can't. You know, you're sitting in college and trading is something that you really want to do. And there are certainly people in the past who have said to me, you know, Mike, I can't trade in college. I don't have any money. And, you know, but nowadays you can simulate trade, right? You can practice your trading. And it doesn't even cost that much to open up a small account, right? And I would just suggest that there's a great phrase that I like to use for people who are in college who are trying to get better at their game, which is, there's no excuses, burn the boats. Burn the boats. There really just aren't any more excuses. You can go open up an account with very little money and you can simulate trade. All right, burn the boats. And so let's talk about specifically what you can do and how you can work on your trading game in college. You can start trading in college, you can train. We have a training program that helps people get to the spot they want to be in and fill that education gap. Unfortunately, for whatever reason, higher education doesn't really have classes that teach people how to trade. They just don't have them, right? I mean, they teach you statistics. They just don't teach people how to trade. You can build your trading skill. You can build your playbook. Building a playbook means you're becoming proficient in certain ways to attack the markets. There's different ways to trade. Perhaps you see swing trades that are working for you or shorter term trades that are working for you, and you very specifically come up with the variables for each one of those trades. And you write them down in a specific template. We call it the SMB playbook template. And I wrote about it in the playbook. And you know, instead of telling me, giving me an amorphous answer about how you like to trade, you can show me how you like to trade in detail with your playbook. All right, and your playbook, the essence of it is to build from your strengths. All right, there's going to be a period when you're thinking about being a good trader that you have to sort of find out which time frame, which works best for you, and which products works best for you. All right, there's going to be some people that are going to be really good investors but terrible short-term traders. There's going to be some people who wouldn't be good investors who are good short-term traders. All right, you want to build a track record, and you want to show that track record to a partner. You want to go in, and during that interview, you want to place your track record on the desk of a partner, and you want to say, you should put money behind my career because of these trades that I've already made, because of these strategies I'm already good at. You don't have to be great at them, but you should be showing that you're at least competent. Does that make sense? Okay. So, yeah, I mean, if you've shown an interest in trading and you do have a track record, it doesn't have to be outstanding. It can just be, it can just be good. And you're clearly working on your game. I mean, I know our firm would really like to meet you. There's my email address. I say this to Ryan all the time. If people really are showing a passion for trading, we would like to talk to you. Those are the people that we want to work with. Those are the people that we want to train. Okay? And again, you don't have to be incredible, but you should show an interest in trading and show some sort of competence in what you're doing. Does that make sense? Now that everyone's taken a picture of my email address, I can now move on. That's new. When I was growing up, we used to just write things down, Ryan. Now everyone's got a phone and they've, you know. Let's not tweet out my email address to everyone or put it on Tumblr or whatever you guys use these days. You know, it's not, I don't want to see it on Facebook, please, all right? So, all right, one good trader. So I wrote down some ideas for you guys to think about in terms of defining a really good trader, and I thought it'd be interesting to talk about some guys who are pretty good who trade at our desk. And before that, I would actually like to talk about something that I feel passionate about. So there is something that I made up, which I call the financial media entertainment complex. So I describe everything that you see on cable television, on CNBC and on Fox, as the financial media entertainment complex. Because I think it's entertainment. I think the stuff that you are hearing about stocks on TV is entertainment. The purpose of it is to sell advertising. It has nothing to do with actually giving the consumer very good information to make good trades, or even investors to make good investments. And I'm not suggesting there's anything really bad about any of these people. It's just, it's not set up for what people think it's set up for. There's this myth about what you're seeing on TV. There's this myth that's being extended and expanded about how you make money as a professional trader or an investor that is propagated by the financial media entertainment complex. And that's my partner who, as you can see, is on the financial media entertainment complex, but one of the really good ones. And so you see, when you turn on CNBC or Fox or whatever you watch, all these people come forward and they're dressed really well and they have really great hair and they're very likable people and they have great teeth and they're uber confident about the direction of a stock and where it's going to go. Facebook is definitely going to go down because teens aren't using Facebook as much as as they were in the past, so Facebook has to go down. And some guy comes on, he looks great, and he sounds so convincing. And there are absolutely no repercussions for that guy being right or wrong. All right, he's going to take that video and send it out to his customers and going to look cool and going to get more customers. Okay? And they do this over and over again. And I can tell you as a professional trader, I have never been that confident in a particular trade. And if I ever feel like a stock is definitely going to go up, that's a time for me to sell that stock or lighten up. That does not exist. Trading is a game of having a slight edge after having built up tremendous skill. All right, some of the great traders in the world barely have a win rate above 50%. The greatest traders in the world we're talking about. That means if they were to go on the financial media entertainment complex and act like some of those people do, okay, BlackBerry's definitely going to go up. It's definitely going to get bought out. Oops. Apple's definitely going to go down. You know? It's definitely going to go down because they're seeing more competition from Samsung. Whoops. It happens time and time again. The market has to go down. We heard people go on the financial media entertainment complex for the past 6 years, basically telling us, warning us that the market was going to go down day by day. Yet in 2007, nobody came on and warned us about the housing bubble. Okay? Maybe one person did. And then after the big decline in the marketplace, after the financial media complex did not warn us about us actually giving back perhaps 30% of our wealth, for the next 6 years, they've scared us, every single up move, about this was the top. And so, look, it's entertainment. It's entertainment. And making bold predictions and being uber confident is not what being a good trader is about. It's not. You know, we sit there, we find patterns that make sense to us, that we've studied. In this day and age, we look for even quantitative, even for a discretionary trader, we look for quantitative edges that can support what we're seeing on our screens. If we're wrong, we get out and we start over again. I'm wrong all the time. I'm wrong all the time. I will say things like, I'm long, I think this is a good trade, doesn't work out, I hit out, I protect my risk, I move on. Eventually I find something that works. That's what professional, I don't know what they're talking about. I mean, like when I watch the TV, I'm like, and so a lot of these people are our friends. And it's like they're all playing the same game, which is fine. I mean, you're getting visibility. But it's like I'm watching them like, what is this guy talking about? Like, Facebook's not definitely going down. BlackBerry's not definitely going down. The market's not definitely going down. The market's not definitely going up. Facebook's not definitely going up. Yes?
What are some good techniques you use to limit the amount of emotions that you have when trading?
So that's a really, really terrific question. And there's a school of trading psychology that will tell you you shouldn't. limit you shouldn't limit your emotions as a trader. And there's another school, the predominant school of trading psychology, that says, well, you should actually learn to limit your emotions. So let's take the school where you're supposed to limit your emotions. You're supposed to trade in the zone. So Mark Douglas wrote one of the really good books on trading psychology. It's called Trading in the Zone. And he talks about this ideal state of just sort of being neutral. And you just sort of see what you see, and you make decisions in a very calm state. And if you're in this calm state, you'll make better decisions. And I mean, if you read Dr. Steenbarger, he will talk about some ways to help you to trade in your optimal state. When you are nervous and when you are frustrated and when you are angry, your brain, you're using different parts of your brain. You're actually using a part of your brain that doesn't make decisions as well as if you are calm. And so some of the things that are taught are visualization exercises. So on our blog, you can go to smbu.com/blog. There's a 3-part blog series that talks about how to do visualization so that you are calmer, you are less frustrated when you're trading live. It was written by Bruce Bauer. He's a hedge fund trader in Russia. He wrote there's actually a video on our blog about it as well. It'll teach you everything you need to know about doing visualization exercises. Another device that Dr. Steenbarger has recommended to some of our traders is to actually monitor your heart rate. And so you can buy a device where you're actually measuring your heart rate while you're trading in real time. And if your heart rate goes up or goes down, that will give you information about, it'll give you information about whether or not you're making good trades or bad trades. I would say that there are people that believe that you should learn to tap into your emotions. So Dr. Andrew Menaker will talk to people about, don't get in the way of who you are. Learn when you're upset, the types of decisions that you make. Learn when you get upset if there's information that you can glean from that and then apply it to your trading. Denise Schull also wrote a really good book called Market Mind Games, where she also talks about just using your emotions. Allow your emotions to come out and don't suppress them, but use the information, see the patterns that are developing when you get in a certain way. Okay? So let's talk about 3 traders, and I just want to go over 3 attributes and we'll answer some questions. So if you ask me what's the most important attribute to have as a trader, it would be mindset. There's a great book written by Carol Dweck, who taught at the university, taught at Columbia and Stanford, and she wrote a great book. She's mainly a child psychologist, and she writes about how the most successful people are people who come in each day to their job and try and get better. This is very important in trading. A lot of people come in and they try to do what? What's that?
Make profits?
Yeah, make profits. They judge their day based on what? How much money they've made. That's not right. That's not right. Each trade is a learning opportunity. All right, you judge each day by how much better you got. You can make a trade and just have gotten lucky. You can make a good trade and lose money. What can you learn from that? The people that have really, Shark is somebody who I wrote about in the playbook, who has the best mindset of anyone that I've ever trained. And he has done all the work that he needs to do after the close, does great reviews, does playbook trades after all his closes for years, very active in mentoring sessions, always trying to get better, trying to learn a little bit of automated trading now, building custom filters. And of all the people I've trained, just has the best mindset, just wants to get better. And if you want to be a great trader, you just have to have that. You have to have that mindset. I want to get better each day. You just have to. It can't be about money. It just will not sustain if you're not trying to get better. And so T.O. is another really, really good trader. I remember the interview that I did with him when he was still in college. He was actually somebody who had started trading in college, and he was profitable before he started working with us. On a side note, he loves trading so much, the whisper is he owns a substantial amount of Bitcoin. Apparently he goes from trading live to then going to trade the Bitcoin market after hours. I think it might trade on the weekends too, but he's always trading. But you know, he was somebody who's loved trading from a long period of time, also very resilient. I mean, I don't think his career path was a straight line to success. He has a personality where he's very, very hard on himself. And you know, he's had periods of time where he's had really, really good successes and then some disappointments, and he's learned to fight through those disappointments. And if you're going to become a really good trader, you're going to have those periods. Can you just pick yourself up and say, all right, this period right now is just a period of underperformance, and I will push through it and get better. You know, you don't hear about words like resilience on the financial media entertainment complex. Nobody comes on and says, you know, what I think about Coke is that you should have a really great mindset in dealing with it. But if you want to trade it well, that's what you need. And then Pippin, we call Swang, who, you know, scalping has become much harder since HFTs have come into our marketplace. Those are the computer programs that are fighting each other out for pennies, and it's taken away some of the patterns that as short-term traders we like to trade. But he still is an amazing scalper. He's actually so good as a trader that a market maker called us up and told him that he was too good and he needed to slow down his trading. Okay, the head of trading at a desk called us up and said he's too good and we're going to actually cut him off this platform because he's too fast to trade against, and our professional traders, it's just, he's killing us. And so we told him to slow down. He slowed down, they still complained. You know, I'm in his office, he's like, but I did slow down. Like, they're calling up complaining you didn't listen. He's like, I listened, I slowed down, and they're still complaining. That's how, he's just, of all the people I've trained, I don't think I've ever met anyone who has the ability to process information as well as he does, to the point where he's able to still micro-scalp and scalp in a marketplace dominated by computers, which he's doing manually. He's also he's also the politest trader that I've ever trained.
Does it make sense for young traders to develop this today?
Yeah, so we call it intuition.
Yeah.
So intuition is something you can build. There's a lot of really great research that's being done about how to build your intuition. And it is something that takes time. What I see from my desk is that people think they have intuition, and they don't as they're developing as a trader, and they're relying upon this feel for the marketplace, which they absolutely do not have, and that's an issue. Intuition is something that you develop over years of studying the way markets move and sitting in front of screens for many, many years. There are plenty of times where I sit on a desk and I just feel like the stock is oversold. But it's because I've watched stocks trade for a long time. I'm not going to tell you how long. That I have an intuition, and it's something that I don't have to think about. It's in my brain, and you do want to tap into that if you're an experienced trader. Until you're an experienced trader, you do not want to listen to that voice in your head, because that voice in their head doesn't have any idea what they're talking about. I think if you're going to be a short-term trader, the game is different than it was when I first started trading. The way that I suggest people think about being a good short-term trader is to be multi-product, multi-market, bionic, discretionary trader. So what I mean by that is you should get good at certain patterns that make sense to you, and then you need to add technology to those patterns. You need to have custom filters that identify all of your best setups so you don't miss any of them. Then you want to start thinking about expressing some of those best patterns in different products. Then you want to start thinking about can you develop automated strategies for those particular strategies that make sense to you. The problem with short-term trading is just discretionary short-term trading on technology that's not proprietary without without a lot of capital, without really, really good backing. Most people try and do it by opening up a small account, and they trade on off-the-shelf platforms. They don't have a lot of capital behind them. Their technology is not particularly impressive. They're not surrounded by a team of traders sharing information with them. They don't have custom filters. They don't have tools that are scanning the markets for setups. I think those traders are at a big disadvantage. So I'd say get some good technology, get some real money behind you. Think about expressing your ideas in a more professional way. There's a lot of literature written about the fact that most people think trends are developing, and they're really not. And the technical analysis is sort of a study in predicting whether or not trends are going to continue or not. And there are people that take swipes at technical analysis because after people learn it, they think that a stock is going to do X, Y, Z based upon past behavior that was illustrating a trend. And then there'll be academics that say it's not a trend, it's just more arbitrary, or it's not going to hold, and technical analysis is voodoo. And so my experience in the marketplace has been, sure, that's true of everything. I mean, if you go take a look at all of the standard moving averages, if you take a look at the 8-day moving average and the 20-day moving average and the 200, and you see stocks that are trending on those averages, and you buy every time it pulls back to those moving averages, okay? Technicians will say buy when stocks pull back to those moving averages. Guess what will happen? If you employ that strategy, guess what will happen? You will with 100% certainty, lose all your money. Okay, so everyone's using these standard technical analysis tools that if you apply them every single trade, with certainty you will lose all your money. But the quest as a trader is to find out the ones that are going to work. We apply some technical analysis, but we also add other factors to it. So for instance, when we trade, we think of our trading decision as what's the big picture in a particular stock, what are the technicals in a particular stock, what are the news catalysts behind it, what is the tape telling us about a particular stock, and then our intuition. We put all of those together, and when we put all those together, we find subsets of trend plays that make sense to individual traders such that they're more likely to work. Does that make sense? Yeah. That's how you get paid as a trader, right? Those are the decisions that matter. So if you're in a position and it's close to your target price and you're not sure if the stock is going to go up or down from that price, what do you think you should do? I think that's one option. What's another option? So close it is one option. What's that? Waiting is an option. Do nothing. So you can close it, you can do nothing. What else? What's that? Put a limit. You can put a stop in it. All right, what else? What's that? What's that? All right, so and I think another thing you can think about doing, so hedging was the answer. Another thing you can think about doing is just lightening up. So to me, what I would do in a situation like that is I would take off at least half or 3/4 of my position, half or 2/3 of my position, because we're close to the target, and I'm not sure if it's going to continue higher. And so the risk reward from that point isn't that great. So I'd rather take off and sort of start over from there. Okay. All right, look, anyone interested in our 10-day free training program, you can go to SMBU.com. There's a banner on the front page. You can sign up for it and start learning. Hi, I'm Mike Bellafiore, author of The Playbook and One Good Trade, co-founder of SMB U and SMB Capital here in New York City. If you want to learn more about SMB, please go check out SMBU.com. Check out our blog where we share tons of trading tips, trading stories, trades we're in, trading anecdotes, and also take the time to sign up for our 10-day free training program, which we offer to the trading community at SMBU.com. We hope you enjoy it. We hope to see you on the site. Trade well.